And we're live. What is today? I should actually look at what the day is before I start my videos. July 16th, Thursday. Oh my, halfway through July. Crazy stuff. Obviously, everyone's waiting for the end of the month and what's going to happen with, obviously, government type policies and the end of a good portion of the CARES Act. So, these things are on my mind because this all plays into a big picture, the macro narrative that we talk about quite often. Today's topic is long term versus short term. Both are meaningful in understanding the potential for an asset, and no, neither one really is more important than the other. They all contribute to the narrative, the cumulative narrative, but they have different, you could say, weighting or different importance or different significance, and that's what's interesting. And you really need to look at both because you could think of short-term analysis as like a leading indicator, confirmation that a longer-term sequence of events is about to play out, and that's what's most interesting. Well, who's in the stream? Mickbon, did you buy to just nibble? Yes. What's up, everyone? Let's do this. Let's get fancy. Oh, I got some old graphics on the screen from yesterday. Let's drop them off and make the picture big. All right, Twitter. So we're going to start with the two assets that I think are most, well, I got three up. I got Ren also, and I also have Link. But these are the ones that I am most interested in for a variety of reasons that I've discussed. I'm interested in dozens of assets, but time horizons are most critical in which ones are going to make the most gains in what time frames. If you want to talk 10 years, you probably want to get in on Polkadot type stuff and the DeFi stuff that's being built on Polkadot. Or you want to get in Cosmos because that's where China's integrating their CBDC. Chainlink, obviously, China is deploying Chainlink nodes. You know where things are going to head in 10 years, but today is today, and 10 years is a long way from today. So obviously the DeFi momentum and the concept, it can't be understated. And this really goes into the consensus article, the Q2 2020 DeFi report that Lewis so kindly forwarded to me. It is one heck of a report. I have a link to it, I believe, in the description for today's video. And what's most interesting is this is not a fad. And this is something that, I watched the Raul Pal and Santiago Velez video on Real Vision. And a lot of the things that I've been thinking about for the last several months really got hit home with many notes in that conversation. The big narrative that I myself see, how liquidity pools and the DeFi swapping is really barter. And the aggregators and the pathfinding, where it finds the optimal transaction with minimized slippage, that's really the evolution of barter. So, there's so much hype around a phrase, a virality, the four-letter acronym DeFi, but what I see is not something that's trivial. This is the precursor to a systemic disruption, and this is where the long-term narrative comes into play. But from an asset analysis perspective, you just can't invest in a narrative. You have to look at the technicals, the short and mid-term, to understand time horizons for the potential appreciation of an asset. And that is what I'm going to try and talk about today, if I don't digress too much. And this is really how the whole big picture comes together. Um, you need the short-term picks to appreciate, and then you could throw in smaller positions in the longer-term plays. But my real goal is like midterm, a couple months. And I'll show the charts in a second, and I'll give more information on the way I think about my investment time horizons. But I like midterm, maybe months, if not a year. I'm not really thinking 5-year, 10-year type projects. And the goal is to accumulate wealth to enough such that at least you have a critical mass to produce yield from recurring revenue streams. And that's why it's so important to have strategy and to really think about portfolio balance, position sizing, protect your gains, and avoid the short term. Avoid short-term trades. It's just a waste of time to think about that time frame, in my opinion. Let's take a look. Lewis is in the house. Crypto fur, yes. No, it doesn't. Bancor have some security problems? No, that was trivial. They left the function open in the ABI contract definition, and they resolved it in a way that I think was uh, uh, responsible and a good fiduciary duty, so to speak. Because as much as crypto is about decentralization, there's nothing wrong with centralization. What matters is responsibility, and the more this overall macro system of products and services gets decentralized, the better, the more healthy it is. But there's nothing inherently wrong with centralization. It just means the responsibility is on a centralized entity. And there's also issues with decentralization, like who takes responsibility if there's an event, if there's no centralized authority that could do something potentially drastic and interrupt an ongoing event. So these are very complex philosophical concepts, and we should not we should not have a negative sentiment towards either one. Obviously, historically, centralization is disturbing with what goes on in legacy finance and banking, but that's what DeFi is. Even if they're centralized entities in the DeFi space, just the mere concept of DeFi, like Compound and Aave, allowing anyone to do what banks do, lend directly and get yield. You can't do that with banks. They don't offer that type of functionality. That's why this is so big. All right, let's take a peek. Let's get into the woods. So, big term macro perspective on Bancor. Bancor has been around for years, um, and it wasn't really seen for what it is becoming for a long time. No one really knew what DeFi was back in 2017, 2018, or at least what the potential of it was. Aave was a lender. So I forget what the original project was called for the moment, but the original user interface was not even remotely comparable to what it is today, and it didn't make sense. But with the way the smart contracts are today, it's very intuitive. Deposit, it automatically lends. You see your balance accrual, and you can withdraw at any time because it's governed by your own private keys. And that's massive, as we keep talking about. But Bancor has been around before these types of critical mass thresholds being breached. We didn't see what it was becoming. So, and in addition, this time frame back in the day, this was ICO hype season. This is the last crypto cycle. So you can't really get a sense of the big picture of the future potential of Bancor or Kyber or Ren. Well, Ren is relatively new, but just by looking at the history, we don't know where it's going to go. What we do know is these price targets, these historical price targets, have meaning when people getting into positions are what they're thinking, the psychological impact of these historical price targets. There's reference points to consider, and probably some resistances, historical resistances to consider. And if you notice here on the big time horizon, the little dash blue line, we're at a very big historical resistance. What is this? January, February, March, April. This is 4 months of resistance here. So if there's a leg up on Bancor, you're getting up to November, and there we get past this ridge right here, July of 18. Absolutely incredible, the potential price appreciation that could occur with Bancor. Now, what is going on with Bancor? Bancor is about to unleash V2. Why I have focused on Bancor, Kyber, and Ren, and frankly Link, even though I don't have a position on Link, is these are systemic disruptors. Bancor is about to unleash V2, which cures the impermanence loss using Link. That's why Link's a damn systemic disruptor. And that is everything in these liquidity protocols. Impermanence loss will set it apart from the other liquidity pool projects, implementations. And that could potentially draw in a massive amount of volume and liquidity, much like Curve did. Curve does not have impermanence loss, but Curve doesn't have 2+ years worth of history. Curve doesn't have a fully distributed asset like Kyber does. And Curve only deals with stablecoins, and that's how it's able to basically eliminate its impermanence loss, the way they've created their algorithmic curve, dealing with the pool balance. So I think they're in a different position. They're not in a position really to capitalize on like a token appreciation, but obviously the volume on their platform is massive. They're the leader in the space, volume wise. Um, Period. But that's just something to consider. There's no way to gain to participate or to gain from that immense volume that's going through the platform. But Bancor and Kyber, yes, these even like Balancer is really cool. And I'm not a fan of governance tokens. I would never buy like BAL or Comp. I wouldn't buy Curve. It'd be nice to get them because they are they're subsidy for participating in the liquidity, but they're definitely not something to bet on appreciation necessarily. Lend, look at Lend. Lend is up thousands of percent. That's another story because they are a systemic disruptor, and Compound is competitive, but Lend has the history. They go back a long time. I don't have the Lend chart up. I'll pull it up another day. But let's zoom in a little bit and see our recent price action to see what's going on. So this is up massive. This is hundreds of percent. What does that mean? That means there's always potential for a loss of momentum. But as we zoom in, there's a couple of things that are quite interesting. And we'll get over to sentiment as well to see some of the social indicators. Let's take a look at the comments real quick. Mick Brown says, "Can't wait to see DEXs having swapping between all exchanges, not just F network." Yeah, but this is where the DEXs come in, like StakeNet and BlockNet, and JellySwap and Komodo, as I've talked about, and that's what's really needed. We need to bring UTXO into the DEX fold because these are DEXs, the 1-inch, Kyber, Uniswap, Curve, Balancer. These are DEXs, or at least the way they really should be. Most people, as I've said, in the crypto space have no interest in trading stop losses, limit orders. No, they have an asset, they want to get another asset, they want to swap at the best rate possible. So this is part of the macro narrative that I always talk about, like where is the space heading? Time horizons. Very important to consider. Cool. All within the F network. Yeah. So that's very important. I don't want to digress too much, but ongoing disruptions don't get disrupted. I've talked about this topic many times. No one is going to disrupt Link. Teller and Band are not going to disrupt Link. They're going to gain market share, and that's awesome. You need a healthy market. They're not going to systemically disrupt Link. Period. Link has way too much momentum. It's the same thing with Ethereum. Polkadot, Cosmos, Elrond. I think there's a bunch of others back from 2017. Expanse, Ubiq. No one is going to disrupt Ethereum. It has way too much momentum. Look how much volume is flowing through the ecosystem, and look how much development activity. It's not getting disrupted. So this is all going to be in Ethereum, and that's another topic unto itself, Ethereum price appreciation versus these utilities, these projects, these tools, the price appreciation of these assets, which are on Ethereum. Pretty much as long as you can do without KYC, no doubt. And all the DEXs are no KYC. And what's cool is Bitfinian has no KYC. So however they're achieving their business model, that is pretty much the only centralized exchange that I find really interesting at this point. And also considering their history and their Alquo token, it was a QLX, XLQ, and the staking and the master nodes that are offered for however they're envisioning their larger platform evolving. Very, very interesting that they've gotten their exchange deployed, and it should not be ignored, and attention should be paid. They're testing Raiden on the decks as we speak. Yes, StakeNet. Oh my God, this is the time horizon isn't right now. Maybe in terms of months, 1, 2, 3, 4, 5 months. When you look at and you think about it from the year perspective, 2 years, 3 years, you see where the space is heading. The whole question is when do you get in to capitalize on the potential development, evolvement, appreciation of assets, and you want to get into ones that are going to appreciate in the shorter time horizon, and then the next, and then the next, and then you keep going because you don't want to miss opportunity. So obviously the shortest time horizon that I see is the liquidity providers. Kyber, Bancor, and Ren obviously is in another league of its own, being a fundamental systemic disruptor. Now Bancor with V2 is about to be a systemic disruptor, doing something that no one in the space does. So the short-term price action is absolutely bullish, very consistent with the overall trend of the entire market. So what do I see? I sometimes go down to the 4 hour or the 1 hour, and actually this is quite interesting. Look at the 1 hour. We're on the way up on the Stoke. MACD is about to do a rounding bottom after a fair amount of bearishness, but take a peek. There's a little bit of a bullish divergence here. There's a bullish divergence here. A little bit, obviously, it's not extremely pronounced. But also take a peek at where we are with regard to the ascending channel. We are pretty much at the bottom. So here's the deal. Unless you think the bottom is going to fall out, this is where you're starting to think about an entry. And why would the bottom fall out? The bottom falls out if there's a disruption in the narrative, if something is fundamentally changing. And you look for signs of that. Unless there is a strong sign of a fundamental change in the macro narrative, the trend continues. And that's the way investing works. This is the way investing works in the legacy financial system, and it's the way it works in the crypto space as well. This is the prevailing macro trend. It is an ascending channel. So the appropriate thing to do for myself and my strategy is to have a position close to the bottom of the channel, keeping an eye on the Stoke and the MACD. You want to see the MACD make a rounding bottom and the Stoke starting to pull itself up. And this is where the longer time frames are more important than the shorter. I'm interested in the days, if not the weeks, but we don't have enough data really. Crypto is still relatively new. But look at the Stoke bottomed out. Stoke bottomed out means it's oversold, and it's primed for the Stoke to start going up, just as is done throughout the history of every asset in the world. Stoke goes from oversold to overbought, and back and forth. So what's most interesting is the vast majority of this recent price appreciation, you never really got into an extreme overbought position, so never really had a real big rip. Clearly at the beginning, sure, and that actually shows in sentiment. And this is the positive here on the Twitter following. So you have a big this is the Twitter following, this one. So you have a big engagement on social media, and people are starting to pay attention. So it's very interesting how these social indicators correlate the price in many regards. Positive sentiment on Twitter. Take a peek at this. So we're at the peak right here. So right here with this large spike in positive sentiment for Bancor, and right now as well as of today, corresponds to basically this level right here. So this is our previous top. Notice the sideways action. So notice the sideways action as correlated to the descending Stoke behavior. So we've got into oversold territory, but we have basically horizontal price action. Now, bear in mind, if you put like 10 grand into Bancor here, you're probably down like 10, 15, 20%. So that is something to consider. But if you're a long-term trader, you would want to find the prevailing trend and expect that the trend continues and have a stop loss outside the bounds of the prevailing trend. So notice this has never really broken the prevailing trend. Some of the averages have peaked, that's peaked outside, but the price action has not. This is really sticking to the prevailing trend very nicely. So this is the types of indicators you look for bets. Uh, now, it, I would have to analyze it more from a historical perspective to see if there was any indicators to signal me to exit the position, because I wasn't in down here. I probably got in around here. Um, so that'd be an interesting topic of conversation. But I think this is primed for a continuation. We're oversold on the RSI on the daily. You want to look for the MACD to start making a rounding bottom, possibly. You want to look for maybe to get closer to the prevailing trend line. You want to look for the averages to start picking upward in slope. And that's how you make these types of large macro decisions, when to find a price for entry, where to find a price for entry, and even how long to hold it. If you want to play trading a bit, you buy when the Stoke is low on the long-term averages. You wait for an overbought Stoke position, and then you liquidate and wait for the cycle to continue. Let's look at the comments real quick. Jason says KNC is driving me nuts. Can't decide what it wants to do. Yes, I'll get the KNC. I have the chart up right next to it. We might extend this video a little bit because there's so much to cover. What do you think of the FUD saying government will crack down on StakeNet DEX for trying to make it illegal because of money laundering possibilities? So the goal, this is actually talked about. Who talked about it? Was it the consensus article and the need for decentralization? Because a truly decentralized protocol cannot be shut down. It's operated by the general public on a distributed blockchain. So the software that's deployed cannot be taken down. The only thing that could ever be targeted is the companies that manage and upgrade the software. So for instance, Uniswap v1, that can't be taken down no matter what. And Uniswap v2, these protocols cannot be taken down. They're distributed in a decentralized blockchain, so it's not possible to take them down, period. There's no way to regulate them, period. You could shut down the companies that manage and update the software, but guess what? Well, actually, they control the private keys. So that's where the decentralization comes in. If you get the private keys in the hands of a decentralized network, there's no regulation possible. And that's the goal. That's what DeFi is pushing for. David's in the garage, my man. All right, let's hit KNC, because this one, the chart looks much better than Bancor. So I'm really bullish about Bancor, obviously, because of the V2 narrative, and the chart looks good. I think this is prime for another leg up. Obviously, you said your stop loss outside the scope of the prevailing trend, but I think this is prime for another leg up. I actually am in position right now. Fair amount of losses going into this leg down, and I probably should have waited for more signals, for more confluence closer to the prevailing trend line. Well, we jump the gun sometimes. So Kyber as well, I'm in position. But Kyber's different because it has its staking component. So I have an isolated position for staking, and I have a trading position to multiply the F bag, so to speak. Kyber looks, obviously the macro, it has history, which is really cool. And this is actually further along in the upward price appreciation, history considered. We are above some previous resistance, and this is going to be one heck of a price appreciation. If we get to any of these previous highs, oh goodness gracious, that's going to be hundreds of percent. So this chart actually looks better than Bancor. Why? Look at the daily. This is a flag. This is a bull flag, more or less, and it's pretty extended at this point, which is awesome. And to top it all off, just look at this. Oh my God. Oh my God, this chart is so cool. Look at the Stoke and look at the MACD and the correlation between the price. Trends don't repeat. The history doesn't repeat, but it often rhymes. If there's any continuation whatsoever to this trend, this looks so good. Look at it. Look at the Stoke. Look at the Stoke. It peaks into overbought. You get your first rip. It drops to oversold, stabilizes in price, you get your second Stoke rip, and you get your second price high. And then this is what's most important. Look at the retrace in price on a 1 day time frame. This thing basically looks horizontal. And now clearly, there's 10, 15, 20% involved in here, but from a historical percent appreciation perspective, look at the size of this rip. This thing looks horizontal. And look at the Stoke drop off. The Stoke is an oversold, bullish signal cross. Look for the MACD rounding bottom. Look for the top, the resistance break on the prevailing trend of the descending channel, which, as you can see here, it pretty much looks like we're ripping through. Look at that. Look at that. Ooh, ooh. I haven't looked at KNC this morning. This thing might be ready to rip. We ripped over here, but that was a fake out. This is where you would buy when it breaks through. See, look, it's difficult because this is where you would sell where it breaks back in, because that would be a bearish indicator. And this is where you would say, I would set like a stop loss, or watching the charts. If you really broke through and you started to plummet, passing these support lines, that's where I would consider exiting a position, waiting for it to hit the bottom of the prevailing trend. But look at this. Ooh, I haven't looked at the price this morning. Ooh, ooh. We're in overbought territory in the shorter time frames, but I don't care. I don't care about the shorter time frames. Look at the 4-hour. This thing could rip to the upside 10% with this RSI. And if you look at the daily, this thing could rip to the upside 100%. Look at the size of this rip. That's 1200. That's 1200 to 1800. 612, 18. That's a 30% rip. And we're coming off two bullish rips. This thing could rip 50% more, especially considering the historical resistances going back, because it has big history. Absolutely fascinating. Spread thin and always go. Oh my God, really? You're going to give me a seizure or something? My man. Missed the 15th, touched on. I haven't been following SNX. I exited my SNX position. I had it at 70 cents. I exited about 280, 290, $3, and my final exit was at 245. I can't argue with being up hundreds of percent. And in the meantime, actually, I think I have like 800 SNX that I got from the SUSD Mint rewards. So I technically do have a position, but the SUSD Mint rewards are escrowed for 1 year, so I can't do anything with them. KNC looks just so good, James. So check this out. This is where, if you're not in KNC, what you do in a position like this, you're outside the bounds of the prevailing trend. You're looking at a bullish signal cross on the Stoke. You want to look for the rounding bottom of the MACD. I would take a position here. I'm already in position, but that's besides the point, because I much bigger conversation and a longer term narrative in play. But if you were speculating, this is where you take a position. And then I would take a look at the 4-hour and watch for. You're only going to exit the position in a scenario like this if there's a big rip to the downside, which is awkward, and that's why you look at this type of data, because you're not going to have a big rip to the downside for like 10, 20, 30% on the daily. You're completely oversold on the daily. But I would set a stop loss somewhere healthy inside of the prevailing trend, like 10% down, a couple percent down from the prevailing trend. If you take a look at the 5-minute chart, yeah, probably about here. See if it breaks through on the. Let's look at the 15-minute resistance. Yeah, somewhere around here. If it breaks through 17,143, maybe a little lower, just a little bit of more of a gap, 1712. And if it breaks through, then you protect your gains. But look at this thing. This thing's about to rip. This thing's about to rip. Now this is why you can't look at the short-term time frames, because I think this thing's about to rip, but you're overbought on the short-term time frames across the board. But then you zoom out to the damn daily, and this thing could jump. That could go 20, 30, 40%. Dynasty limit orders in Uniswap. Now, 1 inch has limit orders. They're a little wonky because they're done in WF, wrap depth. A little bit of a pain in the neck. Um, this is why the long term is so much easier to play than the short term. And you have to have wiggle room, buffer, because then you don't have to look at the charts all day long. I'm not a fan of the limit orders and stop losses. I just do it on my own. But I look at the long-term time frames, and I don't mind 10, 15, 20% price swings. Being up hundreds of percent gives you nice, funny money to play with, so to speak. Sentiment. Um, I should put a referral link in the videos. This is such a wonderful utility. Always take a look at the holder distribution, and you can see massive shifts. And this is a massive shift right here: 100,000 to a million holders of Bancor. Look at the drop off, and look at the redistribution to the smaller holders, the smaller position holders. This is a sign of maturation of the market, less concentration, more diversification, and this is good. That's a good sign. Let's take a look at Ren real quick. So Ren is obviously in price discovery mode. Historically, it's in all-time highs. So we've seen a massive retrace, but not massive considering its recent appreciation. You know, if you got in here at the top, you're down 20% on your money. So it was in an ascending channel. We could delete that now because it has broken the trend. So in a situation like that, an ascending channel, you want a stop loss a little bit outside of the prevailing trend. And you would have saved all of that. You see that little mouse cursor movement? You would have saved all of that from being lost. And now what you have to do is wait for the establishment of a new short-term pattern, or, it's not going to just go spike right up. Patterns must emerge. Don't do anything without a pattern formation. Rising and falling triangles, symmetrical triangles, rising and falling channels, stuff like this. You need the pattern in order to make a decision. The pattern gives you insight into the sentiment, the cumulative overall sentiment of the entire trading market. So I don't trade Ren, 3 dark nodes, so I don't care whether it goes up or down. This is long term. This is set it and forget it type investment. But this is where we're on the daily. This is where I would consider taking a position. Look at the Stoke bottomed out, and you're not even remotely piercing the averages. So this is where you would see a bounce. And if we look at the short-term time frames real quick, I mean, there's the resistance. So look here. Would you look at that? So the 15-minute. This maybe has more downside. This looks like it's going to punch down. And on the 30-minute, you got a fair amount of resistance going up. So this is a very bearish chart, at least for the short term, which has more downward pressure and more resistance in order to switch back into bullish mode. Now, I'm running out of time. All right, Link. This thing is overbought. This thing is so freaking overbought, and it is about to totally do a fat retrace. You're going to see on Twitter a lot of folks saying, buy, buy, buy. But you are overbought on the daily. Are you overbought on the weekly? You are overbought on the weekly. And on the daily, let's see in the 4-hour. On the 4-hour, you got a rounding top on the MACD. This thing looks like it's going to punch down, albeit you're on the upside on the Stoke. Look at the divergence. That is a good sign when you see a higher low. Let's look at the history. No, wait, we're in over price discovery mode, so we're not going to have history on the MACD. That's an interesting one. Check it out. So if you zoom out on Kyber and you look at the MACDs, so look, this looks like a big bump on the MACD, but then you zoom out and it turns tiny. You can't see. Hold on. It turns tiny. So that's the big thing that the history provides, is that great context. I don't know. You got to be careful with Link. It's appreciated so much. But would you look at that? Look at that bullish momentum. Incredible. This could do very well do another leg up. But bear in mind, this is what I like to think about Link. You're straight up Tesla mode. There is absolutely no reason for this to keep running. Obviously, the narrative for Link, it's a disruptive, first out of the gate disrupting technology. But you can't go to $10 in a day. That's not sustainable. You need massive inflows of trading, of liquidity, in order to sustain that price. It's just not going to happen. So this is big risk, little reward type situation. Big risk, little reward. Big danger. Teller was announced, which is really cool. No doubt this is using Link, credit risk protocol, and I assure you they're using Link for real-world data to provide credit risk profiling at the smart contract level. Awesome. Connects to your banks probably, assesses all the real-world data. We talked about the DeFi report. This is a link in the description of today's video. Ooh, goodness, the macro narrative is stronger than ever. And this is what's really cool. These protocols like Zapperfi, DeFi Saver, and FuroCombo. FuroCombo.app, app.devisaver.com, and Zapper.fi. So these are the types of products that will be built and built more and built better. And there'll be so many more. Did I say that? Because this uses Curve, Uniswap, Kyber, Balancer, Synthetics, Aave, Compound. It uses those types of protocols to give you a wrapper for products and services to interact with DeFi to get yield on your investments and manage your portfolio. And this is a big deal, and this is why DeFi is literally just beginning. But you got to think the volume. The volume in DeFi, DeFi Pulse, 2.54 billion. Relative to zero, this is massive. Relative to the world economy, this is zero. So we're talking uncharted territories, and the potential for appreciation is 1,000-fold across the board, including Bitcoin. The potential for the crypto space is a massive. This is why Raoul Pal calls it, a call, or a call position on the future, like an option. The potential for appreciation is huge. All right, so we've gone over a huge amount of topics today: short-term, long-term, macro narrative. And that's what's so important, the big picture. And to understand pricing, position sizing, how to find a good entry, identifying local trends, the charts, the TA, looking at it from the long term, taking a little bit of hints from the short term. And this all goes into the big picture of how you structure and balance your portfolio. And don't forget to protect your gains. Get it out to Bitcoin, get it out to Ethereum. That's where you get it out to right now. The Bitcoin and Ethereum stuff hasn't moved. When we get into 2-3 years from now, then you're going to start moving Bitcoin and Ethereum to stable coins. And then you're going to ride it all the way down. And then you do it, rinse, repeat, and do it all over again. Always a pleasure, everyone. 12:38 on a Thursday afternoon, July 26. I thank you all, as always, for joining. Let's do this again tomorrow, 12 o'clock Eastern Standard Time. Like a broken record. I'll see you tomorrow. Peace.